Okay, so forget the headlines you might still be seeing, the ones touting endless growth in Texas. Because in 2025, the Lone Star State's housing market, well, it isn't just slowing down, it seems to be undergoing a really significant, maybe even surprising shift.
Yeah.
What was once, the symbol of an unstoppable boom, skylines going up, bidding wars left and right, it seems to be facing a pretty profound recalibration now.
Indeed. And I think it's important to stress this isn't just a pause
Hmm.
or, a minor correction like we've seen before. What's quietly unfolding across Texas, it really feels more like a wake-up call.
Mm.
And it has potential ripple effects that could definitely extend far beyond the state's borders.
Ah.
It's an unsettling change, happening with less fanfare than the boom, sure, but no less impactful.
Right. And that's exactly our mission here in this deep dive. We want to pull back the curtain on the top 10 Texas cities where this housing market shift is, well, most dramatic. We're going to detail where prices are adjusting sharply, where inventory is suddenly flooding the streets. Think of this as your shortcut to understanding exactly what's happening. And, maybe more importantly, what these shifts could mean for you. Whether you're looking to buy, sell, invest, or maybe you're just tracking the economic currents from the sidelines.
Exactly. Getting that ground level view is crucial right now.
Okay, so let's start with the overall market shift, just generally across the state. What's the big picture here? We've heard those crazy bidding wars are gone, buyers are quiet.
That's right. The whole dynamic has fundamentally changed. Prices aren't just leveling off. In many places, they're actively dropping. Inventory is surging. I mean, at a rate we haven't seen in a very long time. And that dream of home ownership, which seemed so straightforward for a while there, well, now it's clouded by a lot of uncertainty for many people. It feels like a market that isn't crashing with a sudden bang, but it's sort of breaking slowly, piece
Mhm.
by piece.
Okay, let's get into the specifics then. Let's count down the top 10, starting with number 10, Corpus Christi. On the surface, it's this charming coastal city, but you're saying beneath that sparkle, the housing market is eroding.
Yeah, eroding is a good word for it. What's really striking in Corpus is just how rapid the change has been. Listings have surged dramatically, and prices, they're showing clear declines, especially in that mid-tier range, say $250,000 to $400,000. That's usually your robust family buying
You're
segment.
right, the core market.
Exactly. And a major hurdle there, maybe unique to the coast, is the sky-high flood insurance premiums. Plus, the flood-safe zones seem to be shrinking. That's actively pushing potential buyers away. It just makes the cost of ownership too prohibitive for many.
So even if the house price looks okay,
The ongoing costs kill the deal. We're seeing deals fall apart even when sellers offer big concessions, like covering closing costs. It's not enough. Investors, they're flocking there. Now they're pulling out. Sellers who've been on the market are starting to slash prices. It's definitely facing some significant headwinds down there on the Gulf Coast.
Okay, number 9. Let's pivot inland. Frisco. I mean, this was the undisputed darling of the Dallas-Fort Worth area for so long. Luxury, great schools, endless demand, now facing a particularly brutal reversal.
Oh, absolutely. Frisco is almost a textbook case of what happens when that rapid expansion just outpaces sustainable demand. We're seeing entire neighborhoods, overbuilt maybe, just sitting empty. Price cuts aren't the exception anymore. They're basically the norm. Expected, even.
Wow.
Contracts are getting canceled at an alarming rate. Builders are, frankly, desperate. They're throwing every incentive you can imagine out there. Closing costs, cashback, upgrades still. Buyers are scarce.
And the luxury market.
That's flatlined, which is huge. I mean, values aren't just stagnant. They show zero upward movement. That's a massive shift from the consistent gains they saw before.
Mm.
The outer suburbs, especially, are really struggling to compete. It's a market that just feels profoundly overexposed and oversaturated right now after years of just glowing hot.
It's not just the suburbs feeling the pinch, though. Number 8 on our list, Dallas itself. The economic heart of North Texas, you called it ambitious, now cracking under that weight.
Yeah, for years, Dallas just seemed unstoppable,
Mhm.
right? New towers, tech companies moving in, fueling all this migration. Places like McKinney, Prosper, they were symbols of that boom. But in 2025, that whole narrative is shifting. Home prices aren't just slowing their climb, they're actively slipping in many areas.
Slipping,
And
yeah.
inventory, it's exploded across the entire metroplex. We're hearing from agents, listings are sitting 60, 90, even 120 days. And multiple price reductions are common. We're talking $30,000, $50,000, sometimes even more, just to get people in the door.
That's significant.
It is. Those outer suburbs that were so hot, now they look oversupplied, often overlooked. And the remote worker effect. That seems to have paused or reversed. People aren't flocking there in the same way. So overall confidence is just quietly eroding. And that has a psychological impact, right?
Hmm.
Sellers get anxious, buyers decide to wait, developers feel the sting. It's not a soft landing. It really feels like a slow unraveling of that market stability.
Okay, number 7, we turn to San Antonio. This city was often held up as, like, the poster child for affordable growth in Texas. But now it's sounding alarm bells. Quiet ones maybe, but serious.
Definitely not immune. San Antonio isn't. Prices are down almost 2% year over year, which might not sound huge,
Right.
but the bigger issue is the complete loss of momentum. Buyers have just largely disappeared. Builders are pulling out all the stops, every incentive. Closing costs, upgrades, even rate buy-downs where they pay down your interest rate for the first few years.
Buying everything.
Everything. Yet homes are still sitting for months. You drive through suburbs like Cibolo or Universal City, and the for sale signs feel almost permanent. Cancellations are up, buyers walking away before closing. Inventory has surged way beyond normal seasonal levels. And sellers, they expected quick, full-price offers. Now they're panicking. We're seeing price cuts of $25,000, $40,000, becoming pretty standard just to compete.
What's driving that in San Antonio?
Well, a few things. Local wages just haven't kept up with those rising housing costs. Interest rates are still stubbornly high, and insurance premiums are climbing fast there, too. It's making affordability a real issue.
Right.
So even investors are backing off. And you're hearing local realtors increasingly use the word correction. That tells you something.
Yeah, it does. All right, number 6 takes us to Houston, the energy capital. Facing a different kind of pressure, you say, coming from its housing market.
Yeah, Houston is definitely showing unmistakable signs of a market under severe strain. Inventory has just surged across the whole metro, particularly in those rapidly developed areas like Katy, Cypress, Richmond. Homes that would have sold in days, maybe a week, now sit for rent, sometimes months.
Once.
Months. New listings keep flooding in, but buyers are backing out. Appraisals are coming in low sometimes.
Oh, that's tough.
Yeah, meaning the bank won't lend what the buyer offered. That forces renegotiations or kills the deal. Closings are falling apart more often, so sellers are getting desperate, slashing prices $20,000, $50,000. We've even seen $100,000 cuts on some properties.
Wow, 100,000.
And another huge factor in Houston, flood insurance premiums. They've skyrocketed, especially in zones hit by past storms. That pushes the monthly cost way up, making deals collapse. Investor demand vanished. Out-of-state buyers, they see risk now, not just opportunity. Add to that a softening job market, particularly in energy and logistics. The pressure is really mounting. Houston's sheer size, which used to feel like a strength, now feels like a liability. When a market that big slows down, it doesn't whisper, it roars.
And it's not just the big cities. Number 5 is Sweetwater, a small town in West Texas. This paints a really stark picture. It makes you wonder how these big swings hit those smaller, maybe tighter-knit communities.
It absolutely does. And Sweetwater really highlights the unique vulnerabilities of smaller towns. Inventory there has surged way past any kind of demand. Homes are sitting for months without a single showing, not even a nibble. First-time buyers, often the anchor in these markets, they're gone. Investor flips,
Yeah.
completely frozen. Prices are falling and falling fast. What's different from Dallas or Houston is the lack of a cushion. There's no diverse tech sector, no big employers drawing new people, no wave of migration to stop the drop.
Nothing to absorb the shock.
Exactly. So as more listing hit the market, fear spreads. Sellers cut prices desperately, but the buyers just aren't there. It's a really brutal cycle that's just getting started. For folks who bought at the peak, the losses are already very real, very personal.
Okay, number 4 takes us down south to Raymondville. You describe this town as truly on the brink, its housing market unraveling.
The signs in Raymondville are pretty hard to miss. Demand has virtually vanished. Homes sit untouched for months. Price cuts of $15,000, $30,000 are routine now. And still, no buyers stepping up. The town's economic base is just very fragile, minimal job growth, no strong diversified industry to kind of anchor things.
So no resilience there.
Very little. And foreclosures are ticking upward, not in big dramatic waves, but these steady, relentless trickles. That signals a deeper distress. There's no investor lifeline coming, no influx of remote workers like in Austin, no big migration wave. Raymondville is just really exposed. It feels like a slow-motion collapse, and you can feel the impact on the local community.
Coming in at number 3, a very different kind of place, Marfa, that remote desert town, the cultural outpost. Long attracted a sort of niche audience, but now its housing market is on the edge of collapse.
Yeah, it's compelling how quickly Marfa's unique appeal stopped translating into housing demand.
Mm.
It's almost a perfect example of a speculative bubble bursting.
Hmm.
Listings that maybe a year or two ago sparked all this curiosity from city dwellers, Airbnb investors,
Hmm.
now they just sit untouched for months. We're seeing homes priced confidently at, say, $350,000 back in 2022, now being relisted at $295,000 and still not finding buyers.
That's a steep drop.
Yeah, it is. And Marfa's economy, it's heavily built on tourism and art. That doesn't offer much foundation for housing stability. There's no tech industry, no major job pipeline, no growing local workforce to support things consistently. Foreclosures are also starting to tick up there, again, in those quiet trickles. And unlike bigger markets, Marfa has no investor safety net. It's too remote, services are limited, carrying costs on properties are high. Those short-term rental owners, they've largely packed their bags.
Okay, number two, Fort Worth. Often seen as Dallas's more laid-back sibling, but the housing slowdown there is anything but relaxed. Maybe being laid back made it less prepared.
That's actually a really keen observation. Fort Worth is showing clear, undeniable signs of trouble. Inventory has risen sharply right across the board. Homes that sparked bidding wars not long ago, now sitting 60, 90 days, and the price cuts feel, well, increasingly desperate week by week.
Desperate.
Yeah, listings in desirable areas like Tanglewood, Benbrook, seeing cuts of $25,000 to $50,000. Even then, showings are sparse, offers are rare, sellers are definitely nervous, buyers are understandably hesitant.
What's fueling that unraveling in Fort Worth specifically?
It seems to be a combination. Overexpansion during the boom, definitely, rising costs, sure, but also a noticeable slowing of migration from Dallas, which had been a big driver. Remote work isn't the force it was. Local wages haven't kept pace with those pandemic price spikes.
And the costs.
Right, add in spiking insurance premiums, especially for older homes, which Fort Worth has plenty of, high property taxes, plus some growing uncertainty in the energy and freight sectors. It's a pretty comprehensive recipe for a significant market correction. That confidence, visibly cracking.
Which brings us to number one, Austin, Texas's capital. You're saying it's now demonstrating the most pronounced shifts, the epicenter of this whole Texas real estate recalibration. Crashed, even.
Yeah, epicenter feels right. The figures for Austin are stark, but honestly, they don't even tell the full story. Prices are down nearly 4% year over year, okay? But that statistic hides the deeper distress.
Oh.
Look at the suburbs. Pflugerville, Kyle, Leander, Hutto. They are absolutely overflowing with unsold inventory. Homes sitting 90, 120 days, even longer. Sellers are slashing prices. $50,000, $75,000, even $100,000 cuts are happening just to get noticed. But the buyers, they've just vanished. Showings are dramatically down, offers are rare, investors are pulling out in droves. And ironically, the very things that fueled Austin's meteoric rise, the tech jobs, the remote work appeal, the cool cultural vibe, they're now dragging it down.
How are the tech jobs dragging it down? Layoffs.
Exactly. Significant tech layoffs haven't just been numbers on a page. They've hit those high wage earners who are driving the luxury and new build markets. That created a vacuum at the top end. Combine that with sky-high insurance rates, those wildly overbuilt suburbs. It's a perfect storm. Downtown condos sit vacant. Luxury builds are unfinished. Even trendy areas like South Lamar and East Austin are showing serious signs of distress.
So it's widespread.
It really is. The buyer pool has shrunk dramatically. The affordability crisis, which was already bad, has worsened for those who still have jobs. Real estate agents are warning about a prolonged downturn. Some even fear a deeper crash is still ahead. Austin isn't just the boomtown anymore. It's really grappling with the bust.
Wow. Okay, so just to summarize then, the big themes we've heard across all 10 cities: falling prices, climbing inventory, and this sort of cracking confidence in the market.
Yeah, and these local warnings, they're much more than just isolated incidents in Corpus or Marfa or Austin. They really feel like the early tremors of a comprehensive statewide housing correction that's unfolding right now in real time. It definitely shows us that no market, no matter how strong it seemed or how untouchable, none are immune to these larger economic forces.
So for you, our listener, let's distill some final insights based on this deep dive. Whether
Yeah.
you're a buyer, seller, investor, what are the practical takeaways in this shifting landscape?
Okay, if you're a buyer, the real insight isn't just wait for prices to drop further, although that might happen. It's more about reevaluating the drivers of value. Forget the old mantra of location, location, location. Now, you have to think critically about insurance costs, property taxes, and local job stability.
Those hidden costs.
Exactly. A home that looks cheap on the surface today might cost you a fortune in hidden premiums and ongoing expenses down the road. So dig deeper. For sellers, your true competition right now isn't just the house down the street, it's time.
Time.
Yeah. The longer you wait in this environment, the harder it might be to make your property stand out as inventory keeps climbing. So strategic, maybe even aggressive early adjustments to pricing are absolutely key. Don't chase the market down.
Get ahead of it.
Try to, yes, and for investors. That simple buy low, flip high model, that's obsolete right now in Texas. It's now about identifying structural economic shifts, discerning which regions in Texas are genuinely diversifying their economies, maybe beyond just tech or oil, and which ones are just doubling down on vulnerabilities that are now being exposed. The old playbook won't work in 2025.
So the market has fundamentally shifted. And maybe what comes next will surprise everyone. It makes you consider the broader implications, doesn't it? Not just for Texas, but potentially for the national landscape, too.